talking to us now about where Africa fits within this continuum is the renowned governor of the Nigerian Central Bank and recently named global governor, Sanusi Lamido Sanusi. Thank you very much and congratulations
Thanks,
on your
Lerato.
recent award. What really has been said about this whole idea of financial governance and where Africa fits into it?
I think if you go back to some of the sessions yesterday and the sessions this morning, what's clear is that we have not yet started hitting at the real issues. For me, the problem was not so much the governance structures, the financial system. It was about enforcement, but it was also about defining the links between the financial system and the real economy. One of the reasons the Asian financial system has not been hit was because they learned the lessons from the last Asian financial crisis. And the lesson, I think, for Africa is that the financial system needs to actively pursue that integration with the real economy and make sure it's actually producing goods and services, and that is a sustainable model.
I mean, a sub-theme, to reiterate your views, is that of alternative investments and the fact that money is now moving away from developed economies into emerging markets, particularly portfolio flows. Where does Africa fit within the continuum of alternative investments as being pursued?
Well, the major problem is not so much money flowing or not flowing into a market, but what the markets themselves use the money for. So if you have a stock market that's driven by financial stock, I mean, certainly if it moves up, the money flows in looking for quick profits. But are the capital markets themselves raising long-term money into infrastructure, into power, into manufacturing, or simply raising money for banking and insurance? So it's about attracting money, but attracting the right type of money. And therefore, beyond the markets, there's a question of the right economic and industrial policies that will encourage the movement of finance into the real economy.
Sustainable lending, another core theme that's emerged from this broader issue of financial governance, and I know it's something you're grappling with in Nigeria, is to make sure that the reforms you've introduced over the last 18 months really inject liquidity into the system and get the banks lending again. How does this apply to your situation?
Well, I try to make sure that the banks lend, but that this time they lend rightly. I mean, the problem was not that they were not lending before, it's just that they were lending too much to the wrong sectors. Now, the lending of banks, I've always said, is a nexus between capital, liquidity, and risk. You can put all the money on bank balance sheets. They've got to find a counterparty that's an acceptable risk. Now, sometimes it is a lack of understanding of the industry. At other times, it is an environment. If a manufacturer doesn't have power and needs to rely on generators and diesel, that makes the manufacturer a bad loan. Now, you've got to fix the power problem. You've got to fix the infrastructure problem. If agriculture is just primary production, you've got to fix the value chain problem before it begins to absorb money. So what we're doing in central bank is saying we've got to pursue measures that are beyond the normal monetary policy measures and go into real engagement with government to unlock those structural bottlenecks that stop credit from flowing. And now that's a longer term work. We're doing it with agriculture, we've done it with power, we're going to do it with transportation infrastructure, and then we go on in that order.
But the one impediment you're facing is that as credit flows and hopefully starts flowing and banks start lending again to some of the more critical sectors and strategic sectors, is managing inflation. And I know that there's been a real issue with public debt in Nigeria and the government spending too much. But December inflation looking pretty good, 11.8%, but it's still something you're very worried about?
Yes, and that's why at the last MPC we went through again tightening. I think people were surprised. First of all, we've had decelerating inflation for 4 months, but this bucks the global trend because you've got rising food prices and rising energy prices. And Nigeria, even though we're an oil-producing country, is very, very vulnerable to rising oil prices because we import a lot of petroleum products. Now, that means that as oil prices rise, the subsidy burden is going to increase. Now, either the government increases its borrowing to pay for the subsidy, or it reduces the subsidy, and that is likely to be inflationary. Now, you've got a budget. Yes, it is much reduced from last year's budget, but last year's budget was already elevated as an extraordinary counter-cyclical budget. And 70% of this budget is recurrent expenditure, and that is inflationary. And you have an election year, and you've got AMCON fixing the banks. So on the balance, we think that the risk is that inflation is more likely to be on the rise than to go down, and we're trying to preempt that by starting the tightening early.